what all has changed? Do you feel that challenges have also changed and evolved? The challenges in front of finance minister to address?
First is capex. I think India needs it. Yes, I think it's much more volatile an environment than what it was the last year, given that we will see a lot of changes coming from the West. Global uncertainties are pretty much at its height.
What is your take on divestment, idea of divestment fizzling out?
Right. See, the government came up, government needs resources. It needs money if it wants to plug money in productive assets. Now, one of the ways was divestment, but they cannot even throw away assets at throwaway prices, right? If they are not getting the right value for their assets, then it doesn't make sense.
And the one factor is the constantly elevated inflation, right?
Yes, elevated inflation, because in the last 3-4 months, inflation has been quite higher than what our RBI would have wanted that to be.
How long do you expect it to continue?
Again, as I said, as long as there is uncertainty, there's a lot of speculation that is going on right now, because investors do not know which direction Trump will take, the whole trade and manufacturing policies. So till that speculation is high, there will be a flight of capital towards safer haven, and that's what has happened.
Do you feel that it's an alarm bell for the government, or is it something a cause of a worry, the way the rupee has been depreciating?
So there is one message that we need to understand is that there is nothing wrong with economic fundamentals which is reflecting on currency.
Hello and welcome. You're watching Republic TV and this is Rajat Mishra. Finance Minister Nirmala Sitharaman is going to present the Union Budget on 1st of February. We all know that there are certain challenges that Indian economy is facing. But what are these challenges and in which direction Indian economy is headed? And what are the key measures that the Finance Minister is likely to take in the upcoming budget that will be presented on the February 1? To get more insight on that, we are joined in by Rumki Majumdar, economist at Deloitte India.
Right. Thank you so much, Rajat, for having me over here.
Thank you, Rumki, for joining us and speaking to Republic Media Network. And once again, thank you so much for joining us. Without wasting much time, let me begin by asking you, we know Finance Minister is going to present the Union Budget on 1st of February. I think we are just 10-15 days far away from the Union Budget. One common factor that everybody is pitching for, be it industry bodies, trade unions, everyone, that there is a strong need for giving more disposable income in the hand of the people to revive consumption. So can you just explain it to me in simpler terms, where this consumption problem is lying, whether it's in urban India or whether it's in the rural India, where this consumption problem is lying?
Indeed, consumption is the biggest driver for growth. And given the importance it has, there is a need to push the consumption demand because it has to grow sustainably to ensure that investment keeps flowing in. Right now, the good news is that the rural demand is kind of sustained, seeing a sustained pickup thanks to the agriculture output. Urban demand may have become a little moderated, but what I see is that given that services sector is doing well, which contributes a lot to the urban income, and there is also the wealth market which is doing well despite all the FPI outflows and volatility. Right. Capital markets actually has been very stable. So all this will contribute to the urban income as well, in all. So what we expect is that the government has to ensure that at the rural side, they ensure that the food supply chain is managed well, so that income to farmers is consistent. There is enough innovations and technology that is used to improve productivity. That will help the farmers and rural income. They have to ensure that the construction and infrastructure investment continues, because that will bring money into the hands of the rural people. In the urban side, I think what the government will have to ensure that inflation is under check. They have to ensure that the services sector gets the right boost, because right now services is doing excellent, be it in terms of contribution to GDP, be it in terms of exports. That segment is doing excellent, and that if can be boosted through proper skilling, through proper incentives, and even the startup culture, then it will also help the urban demand as well. And it's kind of a the rural and urban demand, they actually go together. If one does well, the other kind of follows, right? So in a way, there has to be a sync, and the government will have to balance both. It's a virtuous circle that has to kick in.
Also, one thing that we have seen that's common across all the ideas that have been pitched to finance minister in pre-budget consultation is one, the job creation and employment creation, and second is the revival in consumption. So I just want to ask you, the government in the last budget also came up with a lot of employment generating schemes and internship schemes.
Absolutely.
So in the last budget, what we saw that the government came up with a lot of job creation schemes, internship schemes. This time also, industry bodies are pitching for more steps and schemes that can create jobs. So what do you feel that job creation and revival in the consumption are the two biggest challenges that Indian economy is facing right now?
Yes, employment is a must in India, given that India is one of the populous countries. It has a rising number of graduates which are coming into the labor force every year. And it becomes very important that they get the right opportunity, because when we talk about a demographic dividend, that can come only when they have enough money, they have enough opportunities to scale up or to consume, right? So employment is important, and what we believe is that going forward, the government would have to ensure that it incentivizes the private sector to generate more employment, because at the end of the day, it is more a responsibility of the private sector than the government to create employment, because government can enable or create an ecosystem. It's a private sector who will have to ensure that they are investing in the skill, in the employment creation, and also ensure that the wages are keeping at par with inflation and the kind of standard of living that people need to maintain. So that is where I think the government, if you look at the interim budget, they emphasized on employing the young, employing the fresh graduates, and that is what something the government will have to do, right? And I think this budget will probably, like, a large segment of the announcement will be around employment. I'm pretty sure about that, and skilling, and specifically in skilling in technology.
Okay.
Yeah.
Okay. Also, Rumki, one thing that I want to ask you is about the fiscal deficit. We know the budget estimate was 4.9%. Economists and experts are saying that we will end up with somewhere around 4.8%. What is your sense saying? How do you see the fiscal consolidation path going forward?
I think the government has done a fantastic job in ensuring the fiscal consolidation is done through the years. Even during pandemic, they were very, very prudent about how they are spending. They ensured that it's quality spending over volume spending, right? And this is very important, because government wants to give a very consistent signal to investors that they have control over their finances, which is very important, because at the end of the day, investors need to be assured that when they are investing their money in a country, that is safe. Right. And this is one of the indicators every global investor look at. How responsible is the government in terms of its expenses or managing its finances, right? So that is why the government has been consistently making sure it is reducing its fiscal deficit, despite the fact that even countries in the West, they are still have not been able to manage the fiscal deficit, but yet India, having so little resources compared to the West, they have managed their finances so well. And this trend would continue, because going forward, if we want to get to the Viksit Bharat, or we want to achieve those milestones, we need money. We need money from foreign investors, and that's why the 4.9 this year, 4.5 next year is definitely something which the government will keep an eye on. This year it could be lower, but again, this time growth also kind of came down than what we had expected earlier. So the nominal GDP, if it's lower, then it probably may not achieve the target of 4.8, but 4.9 is something the government will try to do.
Since you commended the government's effort of fiscal consolidation, I just want to ask you a generic question for our viewers. Is our fiscal deficit is under control and is very well managed when you look at the peers or the developing nation or maybe the developed nation? What is the fiscal deficit level in other countries, and is that alarming, and India is at much more comfortable position?
India is definitely in a very comfortable position. If you look at in the deficit of other countries, of course, I do not have any numbers to quote right now, but all the other countries have either kept it at the levels of the pandemic where they are, or probably reduced it by margin. We have probably halved our fiscal deficit from 9.1% in 2021-22 to we are kind of coming down to 4.9% this year. That is a commendable effort. And what we have also seen, if you look at the expense, the portfolio, the revenue expenditure and capital expenditure, that ratio has actually come down. Capex share has gone up quite significantly, which means the government knows that if it has to spend, it has to spend which is productive, which is much more long term, right? And this is what I think the Keynesian theory of economics also say. At a time when we are not having enough private sector jumping into the investment, it is the government's responsibility to ensure that the wheels keep moving, right? And the way they would do is where the multiplier effect of the spending is the max. And this is where if you spend it in infrastructure, not only it helps in bringing down logistics costs, which it has, and it is doing, it will going forward even more. But what it has also created employment, it is creating asset, it is creating jobs, income. And in the hands of the people who are in the rural economy or the suburban economy, right? It is also kind of giving a motivation for private investors to come in because they can see competitiveness of the country is improving. So in a different parameters, it kind of ticks all the boxes. Right. That's why the government, I think, has done a fantastic job of being prudent, being not extravagant about its spending, and has managed very well.
Also, when you talk about private capex, let me just come to this question because we know private capex has been a pain point for a long period of time. It was not, government wanted to revive it, and finance ministers has also mentioned it from the various platforms. Also in the past few budgets, we have seen the government has gone for record capex allocation. And many economists have gone to an extent to saying that this is the heavy lifting which is done by the government and it's not sustainable in a long run. Private capex has to pick up. The government can't do the heavy lifting for like going forward. So do you feel that private capex has already picked up, or is it there some green shoots are visible, or what stage the private capex is?
See, yes, at a time when the private sector doesn't step up, it's the responsibility of the government. And I think what the government is kind of communicating that it will do what it can, and it will continue to do as long as it's needed. Now, given that, I think the private capex is also picking up. If there are see, last year was a year of uncertainty because we had elections, not only in India but also US. And both of these two economies impact investment decisions. Now, those two uncertainties are out of the way. Now, there will be some uncertainties which will continue, like, for example, the geopolitical uncertainties, how the trade relations will pan out in the US, and how will it impact the global trade, global investment, capital flows, what will be the decision of the Fed going forward. Right. All these uncertainties will be there. But what the investors would do is they will have to factor in these uncertainties and decide going forward, because now they know India has a stable government for the next 5 years. US has a stable government for the next 4 years. Whatever uncertainty comes, they probably have to make sure that whatever investment they need, they start doing it now rather than postponing or pushing any investments. So I think, and also the capex spending that the government has done so far, the PLI schemes that the government has, we are seeing the PLI now being realized in ground, right? So all these will start when they start kicking in, and it is usually an exponential growth, right? It initially takes off very slow, but once it takes off very fast. And I think this is the year where we will see all the things in bits and pieces that were moving separately will come in sync, and it will help capex grow in the private sector.
Right. Also, since we are talking about capex, what is the kind of a capex allocation you are looking at this time? Any step up you expect this time?
Yes, of course, stepping up will be there. Now the question is I think this year we did lag a bit because of we lost out first 6 months of bringing in the amount of capex that we needed to do. So there is a lot of catching up needs to be done. So the next 4 months, starting from December, I think the capex will pick up, and the government will probably increase it by another 20-30%. to ensure that the message is clear. The government wants investment in India. It is in attracting investments. I mean, who would have thought 5-6 years back that infrastructure will actually attract FDI? Now infrastructure is attracting FDI, right? That is the level of competitiveness we have gone to, right? And that is the message I think the government will continue, because if it has its own skin in the game, there will be other investors who will also invest in India as well. Right. So that momentum will continue.
Let's talk about rupee, because rupee depreciation has been hogging limelight since last few months. Somebody is saying it's very alarming. Somebody is saying it's very good for India's economy and exporters. What is your take? Do you feel that it's an alarm bell for the government, or is it something a cause of a worry, the way the rupee has been depreciating?
So if you look at the way currency has moved against the dollar in the last 10 years, you would see the currency usually has a very stable period. Then it appreciates at a very short time, at a very sharply. Then again it stabilizes. So there is one message that we need to understand is that there is nothing wrong with economic fundamentals which is reflecting on currency. Otherwise, it would have a steady depreciation. Okay. When you see a stepwise depreciation happening, means there is an outlier events that is influencing the currency. This time, the currency that we have seen that depreciating has been because of the fact that dollar itself index value has gone up. It was 96, 97 about 3 months back. Now it is 108. Now, if the value of dollar goes, every other currency who's pegged to the dollar will get beaten up. And so that is, and India has actually done well compared to many other currencies, just because of the fact the economic fundamentals is strong. Growth is the fastest, even though it has slowed down, but still among the fastest in the world. So these are keeping the currency extremely stable. What the traders would like to see is, when I talk to trade finance people, they usually say we would want currency to be stable rather than moving or fluctuating too much, because then it kind of hampers the way of doing business. They need to get into contracts, right? They need to foresee with surety that this is where the value should be. So if you notice, when the currency depreciated from around 75 to 82 back in 2022, but since then, from almost November 2022 to mid last year, the values were between 82 to 83. It didn't depreciate. It was very stable. Then again, of course, after the China stimulus and then US elections and the results, that caused it again another very sharp depreciation. What the RBI would ensure that wherever it is, there might be some correction, so there could be some appreciation, but it will be a period of volatility, but the currency will be stable, and that's what I think the government will focus on. We'll see how far it falls, because we still have a couple of months to go where we will see uncertainty. Right. Given that Mr. Trump will come in as a president, he will announce some policies. Now, how much will that be implemented is something which will be determined long term, but initial announcements will definitely have an impact on the sentiments which will reflect on currency. So we probably expect next 2-3 months of volatility, but then a very stable currency.
Do you have any level in mind when we talk about the rupee outlook going forward?
Well, at the start of this fiscal year, we were expecting it should be around 84 or something, but now it's a completely different story. So we most likely, I think it will stabilize between 85, somewhere around 85.
But volatility is going to stay for next few months.
Yes, we expect in the next couple of months will be quite volatile till we know what policies are coming in.
Yeah, and also I just want to ask you, since you mentioned about President Trump taking over, implementing new policies, he has already talked about tariffs imposing on Mexico, Canada, China and all these things. So how do you see that impacting Indian economy? Do you feel that Trump's presidency is favorable for Indian economy?
I would see it positively, yes, because he has been very vocal about his stance to China. But then the US would want to have its presence in Asia. And the next big bet is India. India and US have had very good relationship over the last few decades. And that is where I think both the countries would try to leverage that relationship going forward. And US will also has, if you look at the number of collaborations that we have done in the space of semiconductors, in the space of defense, kind of tells that we have had very strong ties and will continue to do so, because US would like to have its presence in Asia via India. And India, again, one of the big advantages that India is one of the biggest services exports and have very strong trade relations. And services is something where US may not impose as many restrictions as what they are targeting for manufacturing, right? So if that happens, we will be big service partners with the US, and we will likely see a lot of investments coming in. So in a way, it might benefit us. But again, the fact that there might be restrictions on manufacturing, which will impact our exports, of course. But I think where we need to play our game is up our game in the services sector. That is where I think we can bet big and tie those relationships, make the relationship much more stronger with the US.
Right. Also, one phenomenon that we have been seeing since long time is FPI pullout, FIIs pullout from Indian markets. How long do you expect it to continue?
Again, as I said, as long as there is uncertainty, there's a lot of speculation that is going on right now, because investors do not know which direction Trump will take the whole trade and manufacturing policies. So till that speculation is high, there will be a flight of capital towards safer haven, and that's what has happened. But what is interesting is that we recently came up with a research, and the report is going to be released very soon, where we've realized that even though FII outflows was as big as what we saw in COVID, as deep, but the stock market didn't budge as much. The ability of FIIs to influence stock market has actually come down quite sharply because of the fact that retail participation has gone up. The fact that domestic institutional investors have become a big player in ensuring that stability in the capital market, that has changed the game. And I think this is what I feel the government recognizes, and there might be a possibility in the budget that the government does give some incentives to ensure that they incentivize more investments, more financialization of savings, so that money flows into the financial market or capital market. That's something which might happen in the budget.
Okay. And also, one fact we all know, those who are the economy watchers, that there is interest rate differential because of which people pull out their money from the developing economy and invest somewhere else. So, what is your take on RBI's interest rate? Do you feel that once the RBI will go for a rate cut, this will stabilize somewhere?
In fact, we are in a positive range right now. If you look at the interest differential between US and India, the differential is rising because Fed decided for 2 rate cuts last year, right? And RBI is still on pause. Now, RBI will likely keep an eye on how inflation moves. Now, till last year, food inflation was the biggest challenge, and that's kept inflation high. This year, there will be a pressure from the imports, because most likely if US goes with restrictive trade policies, there will be inflationary pressures. US will see inflation. And if US sees inflation, we will be importing inflation, which means again the inflationary pressures will build up. So in a way, RBI will keep an eye on how inflation moves over the next few months, and till it is convinced that inflation is not sustainably down, or the last mile inflation is not met, criteria is not met, then it may not go for a rate cut. So we are pinning very.
Are you expecting a rate cut in Feb?
Most likely not. Most likely not, because we still have quite a few risks coming from all around.
And the one factor is the constantly elevated inflation, right?
Yes, elevated inflation, because in the last 3-4 months, inflation has been quite higher than what our RBI would have wanted that to be. And even though RBI has a room to cut rates, because as I said, the interest differential is good, but there is a motivation to keep that interest differential good because it attracts investments. We do investment, need investments.
But the government is of the opinion that the RBI should go for rate cuts.
We need credit in the economy. And if you look at credit growth, it has come down, agreeable. But what we also need is responsible credit growth. And if RBI has decided on ensuring that growth in the credit is in the unsecured segment is lower, there is a good check and balance that the RBI is doing, which is commendable. Now we need credit growth, but if you look at the growth in credit in the MSME sector, in the small medium industries, that has been growing, and that is a segment we need the growth to be. So there is a segment which is borrowing. They are investing, but what needs is they need to ensure that the bank balance sheets do not come under pressure. They also need to ensure that the inflation is sustainably down before they can go for a rate cut. What they can do is ensure, the government can do is ensure the supply side is taken care of, because a lot of this inflation challenge has been supply side problem. If supply side is taken care of, then in that case inflation can come down, and that can gives the RBI the possibility of going for the next rate cut as soon as possible.
Right. And what is your take on divestment and because we have seen that the government's bullishness on divestment revenues has gone down every passing year, right? What is your take on divestment, idea of divestment fizzling out?
Right. See, the government came up, government needs resources. It needs money if it wants to plug money in productive assets. Now, one of the ways was divestment, but they cannot even throw away assets at throwaway prices, right? If they are not getting the right value for their assets, then it doesn't make sense. Second is, the process itself is quite complicated. You want to sell one part, maybe the buyers are not willing to take as a whole. So how do they even go with the process? So there are a lot of complications, and I think they're figuring that out. But over the time, they have realized that they need to diversify their sources of resources that they need for investments, and they may not be able to count on divestment as a policy as such. So that's why you probably see the emphasis coming down over the years. But I think the government is trying its best to ensure it gets the right value for the asset it has.
And what has changed in the last 1 year? When the last budget was presented and the next budget is going to be presented in next 10-15 days, what all has changed? Do you feel that challenges have also changed and evolved? The challenges in front of finance minister to address?
Yes, I think it's much more volatile an environment than what it was the last year, given that we will see a lot of changes coming from the West. Global uncertainties are pretty much at its height. We are seeing a possible 4 years of trade disruptions, supply chain disruptions, investments, restrictions. So all these, and of course the whole stance of going green, that also we don't know which direction it will take, given the US may have now a very different stance towards it. So clearly there will be a lot of policy uncertainties which will weigh on India's own policy. But given that, I think government realizes that domestic demand is something they have to ensure it picks up. We need to, India needs to decouple itself from the global economy as much as possible, ensure that there is investments made in productive capital, and also ensure that there is enough FDI coming into the country by ensuring that all the economic fundamentals are strong enough.
Right. So, almost 10-15 days after when the budget is going to be presented, what are the top 3 things you will be watching out for in the budget speech?
So, first is CapEx. I think India needs it. A much more integrated approach of investing in CapEx. So if roads and rails are being built, they are built in conjunction with each other so that they complement the investments. The productivity of these investments are much higher. So one, that. Second would be employment and skilling. Very important, because we need a creation of jobs. We need people having more jobs so that they can spend. And this is where the private sector can play a very important role. So government will incentivize, ensure there are new schemes coming up for interns, and which the government did last time. Third would be the MSMEs. I think they are the pillar to the economy. They are the biggest employers. And if India needs employment creation at grassroots levels, at a broad-based level, MSMEs have to be given the right impetus to grow, right environment. More formalization of MSMEs is needed. And I think technology can play a very important role in ensuring that digital platforms help these MSMEs get to a broader consumer base. They can reach out to bigger, go beyond the borders, get larger consumer as their clients. And this is something which will be looked forward. So I think digital infrastructure spending and boosting MSMEs will be.
And the last question, one challenge that you feel that government can't get its eyes off?
One challenge, I think, for me, I think it would be inflation. Because if inflation is low, it actually opens up a lot of avenues there. Other policies will move, but inflation hits the consumers very directly and very in the short term itself. And if inflation continues, and over the last 5 years, inflation has been rarely below 4%. Like there has been only 3-4 months in between where it went down below 4. Otherwise, it has been always above the RBI's target rate. So if inflation is not down, it builds into the inflation expectation. People change their behavior. And if you need consumer demand, which is your 55% of your GDP, you need to ensure that consumers are spending and they are not worried about their purchasing power. So I think that is something which would be a primary focus. And yeah, employment.
Thank you, Rumki. Thank you for sparing time out and speaking to us. Thank you so much once again.
Thank you so much, Radha. It was nice speaking to you too.